following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listening audience out there is still intact and none of you have closed out your accounts or headed for the hills, given the fact that the Tusaw apocalypse is nigh upon us, and it is. They must have heard the last show, Uncle Mike, because the sell-off was rampant today in the broad market. You know, there's an old Chinese proverb / curse that says, "May you live in interesting times." Well, we're certainly seeing our fair share of interesting times these days. And so, with that said, I think before we even dive into the banter block, because so much has happened today, we're just going to skip the banter and roll directly into the trading block.
The Trading Block.
All right, and welcome to the Trading Block. My name is Mark Longo from the OptionsInsider.com, and many of you probably know us as well from the old Options Insider Radio Network. As we said, it was quite the bloodbath on the street today. S&P down 60 handles to 1,200, pretty much even. So, Uncle Mike, your puts, like you said, are in the money now, or getting close to it. Dow down 512 to 11,383. NASDAQ clobbered down 136 handles, 25.56, and the good old VIX cash ending the long malaise and volatility and the long, protracted, slow sell-off in vol, spiking back up over the 30 handle. You know, we had debated last week on this show what would happen if the debt deal didn't happen, or if some other numbers came out negatively after maybe a deal didn't happen. We had debated somewhere in the 30 to 100 handle range, and we did. The market was crushed, of course, by the old jobless claims data, which were far weaker than expected, and I hope Mr. Grigas isn't on the show today, but I hope he has turned to the dark side as well, and he's not exactly loading up on the bullish side like he has been lately, because otherwise he's getting clipped on the upside and the downside. So not a good day for him. We did get not surprisingly, talking about VIX futures set a record today. They did about 112,000 contracts today, which is about nearly 10,000 contracts higher than the record they set about a week ago, which was the previous record. So anyway, not surprisingly, lots of activity going on as we're creeping toward the Tusaw apocalypse. I don't know if you heard the last show, Mark, you weren't on it. Tusaw predicted a 100-handle sell-off in the S&P, and if you add in yesterday's 30-odd handle and today's 60-odd handle, we're getting close to it.
Yeah, no, absolutely.
Well, I predicted it based upon the debt ceiling thing not passing. So imagine if it wouldn't have passed, then we probably would have gotten 200.
The long-term damage done by the debt ceiling, I don't know that we can underestimate how bad that was. That was just one of the most boneheaded things I've ever seen go on.
Well, we had that Bernanke put in place all the time, the prospect of a QE3 that continually buoyed this market, and now those prospects are dim at best. So hence our turn to the dark side here. And with this two-saw apocalypse lighting up the tape, it was, like I said, just a sea of red. We talked last show about SIBO and their earnings coming up. Well, the earnings, they beat analyst expectations, wasn't enough to save them today. They got clobbered along with everybody else. They were down about 5% today, so SIBO pushing lows there in that name.
You know what's interesting is a day like this, you'd almost think that SIBO would be up. If you think about it, especially with that VIX product.
I don't think in the days like this when it's just a stampede to hit the bids, I'm not sure how nuanced the vast majority of that paper is coming in. You would think if they stopped to think about it for a minute, you're right. They're hitting VIX records today. VIX was up 156%, I believe, over the same period last year. So the volume in those products are ridiculous, and the ADV and the revenues over at SIBO were strong, and yet wasn't enough to save them. Ford, Cisco also getting summarily crushed. Uncle Mike, are you just long the puts out here in Ford, or you have the stock? What's the game plan today for Ford?
Keeping it in a small position as it has been. It's a smaller position, so
there we go. It's a long-term holding now.
It's become that. I mean, I want to start selling some covered calls against it, but if it keeps going, like what we were talking about earlier, it doesn't make sense to sell covered calls on at this point. I'd like to do the ratio spread on it. That's probably the next thing that I'm going to look at, but if it keeps going down, it doesn't make any sense to do so. I still stand by Ford for the long term. I think it's, I've admitted my mistakes on this show before. I think I gave my Kramer impression about hitting myself on the head at some point on another stock that'll remain nameless that I hate now, Cisco. But with it, I think that what I'm looking for in Ford right now, I want to see a little bit of a bounce back, and then I want to do a 1x2 on it.
Yeah, Ford is looking pretty tasty at these levels. I do have to agree with you. I mean, we're pushing back. It closed well below 1086 today. We're pushing back toward those post-09 really deep, dark trouble days for Ford levels, and it was trading around $8 or $9. So we're getting down into that range or close to it again, in which Ford as a 1x2 or legging into some short puts to get long some stock at some relatively enticing levels is indeed a good trade. Speaking of getting long, using short puts to get long stock, I know you guys over in KYO are super jazzed about LinkedIn these days, at least Auntie Mike is. I'm not sure. Maybe he hasn't been trading it as actively since he's been doing other things like having children. But when he's not doing that, LinkedIn had their earnings today, and they actually just came out a few minutes ago, and looks like they are the first bullish note we're seeing in this otherwise two-saw apocalypse. The stock got hammered today along with everything else. It was down about 10%, about 10 handles today. I guess the numbers were fairly strong, or they're back to pretty much where they were trading during the day. So it's a shame for them. They could have been up, but they hadn't gotten clobbered with everybody else throughout the day. So yeah, they're trading about 105. They closed at 95 today. So Mr. Sebastian, maybe that's your cue. You were toying with dipping your toes into the after-hours futures and picking up some S&P futures. Maybe LinkedIn will turn the tide.
I actually sold VXX calls about 10 minutes ago.
Did you?
Yeah.
What did you end up doing? I know you were leaning to the downside on VXX. What did you end up doing with that spread?
Building, putting more of it on today. My hedge, I actually, thank goodness.
I was going to say that hedge has got to be looking pretty good for you right about now.
Oh my gosh, thank goodness I do that. I always put on it no matter how strongly I feel something gets overpriced, I always put on like the apocalypse hedge. And so what I have on right now is about 100 of the August 30, 32.5 call spreads for 20 cents. And they're hedging my entire, and they're kind of hedging my VXX, which is a big position at this point of basically long puts and short calls across August and then September now. I actually today, with August so tight and with kind of where the market is, I was actually buying September because I think that will, I'll be able to participate on the down move just as much there as anywhere else. So, interesting. You know where VIX futures closed today, Mark? Closed around 2760. And it closed around 2760 in huge backwardation with August, with September. The September future closed at, let's see, at like 26 even, so like $1.50 under August. So we've got some huge backwardation. We had the big day I've been looking for. I prematurely called the top in the VIX when we hit 25.80. And I admit it, but I think that with the way the VIX futures are trading, there's plenty of room for them to rally, but there's some buried trades in VIX right now, in the straight VIX, that, obviously I'm working on more in particular with my clients, but if somebody that is savvy and knows what they are doing could get into a spread that has protection up to a VIX of about 50 and doesn't lose if the VIX settles 4 points lower. And, there's some really unique trades out there because the vol got so crazy. Mark, you'll love this. The VIX August, 55 calls, okay? 20.35 on the close. That's unbelievable.
The 55 calls?
Yeah. Tell you what you can do. If you really think things are going to blow up that much, buy the 40s, sell the 50s. Do that, or buy the 42.5, sell the 50s. Take in a credit, and right home when you collect your cash or the skew curve completely collapse. There was an absolute panic in VIX skew today, and there was not that same panic on puts. As I was talking, at the money really got bid up in SPX today. Meanwhile, curve got bought in VIX itself. It's again.
Where are you seeing these prints? I don't even see these prints going up.
I'm looking at where things went out in the bid asks. I mean, they're insane. I personally sold the 47.5s at 30, and I thought it was a sale. The bid out was they closed 45.75.
Jesus. This is silver upside all over again.
This is reminiscent of what we saw in like May of 09 when the VIX completely topped out, or remember we talked about the guy that traded the 22.5 31 by 2 that got into the last pop. Same kind of spreads. These things there is so much opportunity in VIX options, volatility products, all sorts of crazy things. An interesting trade. Let's say, Mark, trade it. Here's what I would do, right? Here's what I might do tomorrow. I might buy XVIX. All right? XVIX is long to VXZ, is the equivalent of short 1.
Is that one of those crazy ratio ones?
Yeah, it's short 1 VXX, long 2 VXZ. And so what you get, it's a term structure trade. So it gives you the opportunity to sell the front months, but you're long so much back month volatility that you're actually somewhat protected. So if that turn structure really tanks, this thing's going to go from about 23 to 26, 27, and your downside is maybe $1. So the risk reward is really there. So there's so much opportunity in these VIX products right now. Somebody that knows what they're doing could really do well.
I thought people paying up 75, 80 cents for 40 handle out of the money calls in LinkedIn today was crazy.
Yeah.
But VIX skew is looking also disproportionately insane.
Oh, it's completely out of whack.
And Uncle Mike, since you said you were very active right today in the old metals, give us your metals/commodity rundown for today.
Well, I think that with the ones that I follow, we don't have any positions on oil, but I do watch it pretty closely. I think with oil, it's just a lack of demand. Thought with the marketplace is just along the lines of, well, everything, if the economy is going to go down the crapper, who's going to want to drive a car or buy oil anyway? Let's sell it. Pretty simplified explanation in there. And with gold and silver, gold actually surprises me that it didn't go down more, quite frankly. We're hedged at the 158 level on GLD, and then with SLV, we just went in the money. We were hedged at the 38 level. I'm surprised gold didn't go down more. Just there's such a flight to safety today. I'm actually kind of surprised it didn't go down. So
didn't it hit an intraday all-time high?
Yeah. Gold was up a lot early in the day. It was at GLD at 163.87.
Mike, what do you think about this? The reason why gold sold off was so that people could pay their margins for their other trades.
That could be it. That could be it.
That actually could be it, is the scary thing.
Now, I'm looking to see if we're having a reprise here in the silver upside skew, and it's not looking like we're seeing any panics to the upside like we did a few months ago.
Look at gold. Gold skew is crazy. Gold skew is actually really high. Gold vol is really high. You could actually do this. In GLD, you could do the 161, 167, call 1x2, and take in about 15 cents. That protects you up to about 170 or 173 in it. That was a trade and a half.
Yeah, a lot of these commodity skews, they're so fun to parse because, it is the inverse of what we see out in the equity world, what we're used to playing with on a regular basis. And so you get a lot more juice on these upsides. But on the flip side, they don't always perform the way we anticipate them to because they're not playing the same game that we are here on the equity space. And Mr. T-Knob, what else did you see in the world of commodities? I know you're a huge cotton man. Any action out there today in Bale?
In Bale, no, not at all. The big commodity. The big commodity that everybody was talking about today or trading today was silver. Silver more than anything else, more than crude oil, more than gold. But, it definitely jerked a lot of people around. And then, once they saw silver start moving, they were wondering where's gold going, where was gold going to move to. But for the most part, it was silver. So, yeah, I would say silver number 1, crude oil number 2, gold number 3. And bonds. We had a lot of people who were kind of puking out of their bond positions there. People that were shorts. There were short call spreads. Now that they're hurt, they owned all these puts. They were wondering what to do with them. So yeah, I would say people in the wrong side of the market in silver or bonds today really were the ones that were hurt.
Yeah, bonds have just been a roller coaster, a nonsensical roller coaster, I think, for most of the past few sessions. I can't wrap my head around what the hell's going on out there in the bond land. I thought they were a screaming sale a while ago, and apparently I was ill-informed.
I'd say in the short term, it's just a flight to safety, I think. That's what happened in 08. A lot of people, I remember in 08, they were actually I think it was the 1 month treasury. There was actually a negative yield on it for a little while.
Yeah, I'm surprised that you guys haven't talked about Bank of New York charging some of their depositors. Did you guys read about that?
No.
Bank of New York adds 0.13% fee to deposits. That's essentially because the T-bill has a negative yield right now.
That's correct. Yeah. Treasuries. Did you guys see where the 2-year and the 10-year are trading? 2 years at 2.5%.
Yeah.
10 years like 3%. They are insanely cheap right here. I have a theory. Do you think people are running up treasuries ahead of a QE3 on top of the fact that there's some fear? Why would you want to own a treasury right now?
Yeah, I agree. I think that's really kind of where the trade is right now, is in the treasury market. Everything, we had the big swings and big moves today in the equities and in the metals. And I think the smart money sort of had their trades on, from a while back, waiting for a day like today. And I think right now they're sort of setting up their trades for another move in the treasury.
All right, and that's going to do it for this extended but quite interesting trading block. And because there is so much going on today in the markets, we decided to curtail some of our other segments because pretty much everything that was trading today was pretty odd. And so we don't need to go. It would take us too long to parse all of that. And there's so many other things that are happening in the markets today that is worth devoting a lot of time. But now we're going to roll right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com options.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is the portion of the show where Mr. Bouffant, a.k.a. Tim Navabi, takes over and breaks down what is going on in the land of OX. And Mr. Tinav, I hear a little birdie has told me that you've been compiling a list of some of the interesting and or unusual and or common and or annoying questions you receive on a regular basis over there at OX. So why don't you regale our listeners with a few of those, and what is your topic of choice for the questions for today, sir?
Well, it's just pretty fitting for a day like today that, as we've talked about, today is the day you really want to be working with somebody, because there's just too much action going on to really, digest it all yourself and trade, yourself and know exactly what you're doing and not have any questions whatsoever. So, on a day like today, the theme sort of is don't panic, as difficult as that seems, and be prepared.
So the Hitchhiker's Guide to the Galaxy strategy for trading then?
Yeah, exactly. Exactly. There was something you said earlier. Something you just mentioned, annoying questions. Customers will say, I'm sorry, I have an annoying question. I'm sorry, I have a stupid question. Let me just say, really, for as long as I've been a broker, very, very long time, more than 10 years, there is no question ever from a customer that I would consider stupid or annoying. Actually, what would be annoying is when somebody is not asking the question and instead telling you to do something that doesn't make sense at all, and then not sort of knowing or listening to the feedback or insight, from the professional, whether it be a mentor, another broker. That's the problem. It's not the question. And I always tell customers, I'd much rather talk to you and answer your questions, before you place the trade, rather than afterwards, because a lot of times you may make a mistake or not know what you're doing or do something that, you thought was going to have a different outcome, and now you're unhappy, you're annoyed, you're the ones calling us names and stupid, and so it's just better to ask the question first, rather than later. And then sort of going back to some of the themes from today. In particular, the market's going to be moving a lot, very wide swings. For you to sort of try to get a quote and place an order, for where the market's trading at, it's extremely difficult. I will always tell customers, what is your limit price? Pretend the screen isn't there. Pretend you don't have any quotation in front of you. What's the price you want to buy it at? What's the price you want to sell it at? What is your limit? What is your stop? Because I see a lot of times, customers will try to, hit a bid, hit an ask, and they won't do it. It's going to move around too much. So, I would say, number one, have your price in mind rather than the market price. You're going to trade the market. Otherwise, the market's going to be trading you. The other simple things you can do on a day like today, be prepared. Have your account number with you, in front of you. Know what it is. The customers that do well on a day like today, or, aren't pulling out their hair, or they're not panicking, are the customers who are prepared. They know that there might be a slight hold because we're busy, but they have all the information there with them. They know their account number. They know how much is in their account, how much is available in cash. They know how to get to that on the website while I'm, talking with them. Because, these are just a lot of the important things. If you're going to be, stepping in and buying, make sure you have the cash. Make sure it's free and clear. Don't expect to try to send money to us via a check, via ACH, and that's going to meet a margin call. Margin calls are only met two ways. You wire us money or you offset the position. That's the only two ways I know. So, know your balances, know your account numbers, know your ticker symbols.
Well, you guys did just start, I think, was it Grigas and maybe who mentioned on one of the recent shows, a lot of people do the auto bill pay through their bank, and you guys will take It's another way they could do it a little faster. It might save them the wire fee if they do it that way. Because you can usually get an automatic transfer in like a day or so, it seems like, in a lot of these auto bill pays, because OX usually is a recognized recipient on a lot of those systems.
Yeah. If Griga said that, I haven't seen too many bill pays personally myself. I come across a lot of people saying, well, I just processed an ACH. Well, it doesn't cut it. Somebody wanted to come in and drop off a check. So we said no.
That's fantastic. I love that.
He said, well, we said, you want to drop off a check? No problem. Make sure it's a bank check. No, I can't. Too much. If you're trading futures, there really is unlimited risk. Can be. That is a possibility. Things do go limit. You can't get out. You really always have to have worst case scenario in the back of your mind, or even a sheet of paper that says worst case scenario with a list of what are you going to do. Including, liquidating your favorite positions or your worst positions. So, the biggest thing really you can do on days like today, and this is just day one, is be prepared. Know that really sort of in the end, as I said to somebody downstairs, really it's only money. It's not going to say hello when you come in from work. It's not going to ask you if you want to go out to dinner. That's kind of what we're dealing with here.
Speak for yourself. My money always greets me at the door when I come home, and I frequently have dinner with my money. It's quite a fun experience. I recommend it to all of our listeners. Sit down, have a nice steak with your money, and see what happens. You never know. Money's a cheap date.
Yeah, exactly. Here's the other really simple one that I like to tell people. Well, they'll say, well, how do I know when to get out? And I'll say, well, okay, if you lose $5, can you sleep tomorrow? Yeah, I got no problem with that. Okay, well, how about 5,000? Well, yeah, I could probably get to bed. Probably wonder a little bit before I do. Okay, well, how's 50,000? If you lost 50,000 tomorrow, would you be okay sleeping? No, not at all. Well, okay, so now we've got a limit. Somewhere between 5,000 and 50,000 is your risk. It's very, very important, I think, to have your risk measured before you step into the trade.
Good advice, as always, Mr. T. Now, I'll have to check, speaking of those account funding methods, because we do obviously have an OX account here, and I do believe I did use something recently, one of those auto bill pays, to fund something in there. I don't remember what time frame. It wasn't anything that needed to be timely. It was just adding more funds, so I didn't really track how long it took. But I know it did at least work, so if you are looking for an alternate way to fund your account, maybe not for a margin call, but it is easier than doing it some of the other ways. So something to keep in mind for future reference.
I was just going to say real quick about the funding, like you're saying. Yeah, the worst time, I think, really to do a funding is on a Wednesday night. Because it is going to take 2 to 3 business days, up to 2 to 3 business days, for the money to get here and become cleared and processed. So you're looking Monday, Tuesday, and it really seems like a long time. So I think the best time to do it is on a first thing Monday morning, and the worst time is really like on a Wednesday night. And I know, I kind of mentioned about, how do you meet a margin call, and you offset your position or your wire-less money. I know there's a lot of variations on how margin calls can get met, but that's my rule. That's what I stick with. It. I've been in futures for a long time. Rarely will I tell someone anything different. If you get something that says you're on a margin call and you have so many days to meet it, go with it. But if the position is getting worse, the last thing we want is to have to call you and say, your account's debit. You do need to send us a check just to make your account balance zero. Because most of those times you hear, well, I'm on my way to Europe right now, so I'll I'll call you back later.
Real soon, yeah. Checks in the mail. Well, Tim Navabi, both inspiring and or depressing commentary on the state of the brokerage space. But also, I'd imagine a salient point, because I'd imagine a day like today, there are more than a few margin calls going out and more than a few people right now scrambling to think of how they're going to cover those margin calls and what they're going to do going forward. So it's definitely some good things to keep in mind as these people are preparing, and also what they can do when they call in to you guys. Having the account number and some of the other things are really helpful. And I also can personally recommend try the extend help if you do use the extend, because you can click on the button and someone comes through live chat right there, which to me is always just amazing that you can hit a button and have a broker almost at your beck and call. It's pretty amazing.
Yeah, I was going to mention that real quick. I mean, especially if depending on the kind of work you need to get done, even if it is to place an order. I mean, I know there are brokers on that live chat. I recommend that. I use it myself personally for just other, things, banking, whatever, phone companies. I use live chat all the time. I think our live chat is extremely effective, especially if you're overseas. They're very good on live chats. So, we do get busy on the phone. Sometimes even there we get busy. But really, if you don't need to make the phone call and it's something you can get done over live chat, go ahead and do that. And just let me say one other thing real quick. I have, talked to a lot of people who have been, on margin call. I'm talking about the over the course of my career, and I can really tell you that when you are on a margin call, it's you do not personally you don't want to get out of the position. You don't want to take that loss. But I will say, the moment you cut your loss and the moment you're out of the position, you'll feel better. I mean, you really will. I've seen it right on the phone. I mean, yes, it's a major loss that you just took, but if you stay in the position, you still got to think about the position and worry about the position. So you will feel better in some sort of way when you do offset that margin call.
You heard it straight from the mouth of Tim Navabi, part trading specialist and part therapist. That is, he's the Dr. Ruth, the Dr. Laura of the trading world. All right, and with those sage words, sir, we will close out the Xpress Block and roll right into Around the Block.
Around the Block.
And welcome to Around the Block. This is indeed the portion of the show where we discuss what's on our horizons for the coming segments, or I should say for the coming sessions. And as you might imagine, given our discussion in our extended trading block, everyone's eyes are watching the overnight futures right now and some of the earnings. And LinkedIn, let's do a final update here on LinkedIn, and still holding to the north, up about 6 handles now. So looks like there's one shining ray of hope in the morass of blood that was today's market. But it will be interesting to watch tomorrow if we do indeed continue the sell-off. Non-farms, obviously a big factor in that. If non-farms come in even close, I think we might see a bit of an amelioration here of this sell-off, a bit of a curbing of hitting the bids. If non-farms are as dire as some of these other indicators have been recently, then watch out below. The tupocalypse will be in full effect. With that said, obviously you guys are watching the non-farms, and Uncle Mike, you got your finger on the button ready to go on those downside puts if we do indeed turn to the upside tomorrow. Otherwise, you're a happy man if we keep going south.
Yeah, I mean, if this is one of the few times, it's kind of like the opposite of what a trader's stress normally is, in that normally going into a big announcement, you're stressed that something's going to happen before the market and you don't have control over it. But in this case, if the market does gap down, we're in a better position because we have so many deltas that were taken off the table by the market downturn today. If we do start coming up tomorrow, I will roll puts down, and then logically, some people may say, well, wait a second, why would you want to do that? Because doesn't that take away your protection? What if we go right back down again? Like, well, it's one of the things there. You got to have some skin in the game somewhere, and our hedges have worked out, so this is how we're going to work it.
You still long that 325 put out there in Apple?
No, 375 puts.
Okay, you rolled up. You're back
rolled
in the
rolled that one up a while
stage.
ago.
You're hoping for that one to come play anytime soon, that good old 325 strike. All right, Mr. Sebastian, obviously happy that you added that upside hedge. I know we were discussing last week, you and I anyway, whether 50 or you should do more, and I was urging you towards more on the upside of that upside call spread, and I'm glad you did indeed do that, because it could have been pretty ugly otherwise.
No, I actually think that we're going to see this. I think we're going to see a big bloodletting in government jobs, but I think we may actually see a little private sector in there. I'm actually expecting things to come in pretty close to in line and maybe even beat a little bit. I'd be shocked if they didn't actually.
So if they beat, are we off to the races, you think, or it's still not enough to move the needle and we keep heading down?
I don't think it's off to the races, but I think it maybe helps us build a little floor here. 1,200 is kind of a mental level. I wouldn't be shocked, and I'm telling you, I wouldn't be shocked to see the Fed come out and say something tomorrow. They obviously can't lower rates, but what they could do is they could try QE3, they could try a lot of other things. So I wouldn't be shocked to see some of that type of stuff either. So
would not be the height of irony that we just finished our debt ceiling debate and we got all of our fiscal house in order, and then we start hemorrhaging more money again into QE3 2 days after? It would just be it would just prove what a mockery the quote unquote fiscal responsibility is in Washington. Oh, we're all done spending. Oh, here's more spending.
Right, I know.
And Mr. Tinov, what are you watching around the block? Obviously, non-farm's big on your horizon, too. You going to come in early tomorrow to man the phones?
Yeah, I'll probably come in early. We're probably going to be very busy. We weren't as busy today as we thought we'd be. So, everyone's on vacation. It's the summer. I think people will probably look at their accounts tonight and say, oh, I got to make a phone call tomorrow morning. Well, so does everybody else. I don't know why I'm taking a guess here. Expected 84, and I think maybe they'll do some sort of revision to the prior. Other than that, yeah, I mean, I could, boy, I don't know. I really don't know on this one. I don't think it's going to be very dramatic as far as the number release, but as far as the market movement, tomorrow being Friday, I could just see a lot of chopping going on, really,
All right. Well, I think with that, I think we could curtail this around the block segment, and I want to thank all of our panelists here for joining me today in this crazy, mad session we had today. And starting off with you, Uncle Mike Tusaw, what is coming up for our listeners over at Know Your Options, Inc.?
We have a webinar on Monday night, Calendars and Diagonals. We plan these pretty far in advance, and we never know what the market's going to dictate. So it was ironic that today we had a webinar at SFO Magazine on stock repair, and I'm curious to see what the market does going into our Monday night webinar on Calendars and Diagonals. Tune into our website.
Tune in live to Uncle Mike to see him react to the market as it happens. All right, Uncle Mike, thank you for that. You may now return to the mountains, sir, until we call for you again. And speaking of the mountains, our other man from the mountains this episode, Crazy Greasy Meatball Sebastian. What is coming up at optionpit.com, sir?
All sorts of stuff. We're in the process of revamping our product offering. There's been all sorts of really just crazy things going on here. One of the nice things about being in a group like Option Pit is that we've got guys talking on Skype. We've got guys talking via our chat during all email back and forth, where I can tell people, hey, you don't need to panic. You don't need to sell. And I can talk to people about, hey, dummy, take that spread off. It doesn't make a lot of sense. So in the near future, I'm going to be having a lot of fun working with some people, getting them set up to make money. And that's kind of my goal here.
These are the fun times for people like you and for who do a lot of mentoring, just because this is the time when, quite frankly, you need someone working with you. I mean, this is the time everyone's out there writing iron condors and doing all the things that the newsletters are prescribing for them. And now is the point when do you adjust? Do you have to adjust? What do you do? This is the part where the rubber hits the road for much of the trading world.
Mark,
and,
if you had read my blog last week on about 6 different occasions, I said, you know what looks like a great trade here? Selling S&P time spreads. You know what else looks like a great spread here? Selling S&P time spreads. And I brought that up probably about 4 times before I went on vacation. And
many of those people were very, very happy that happened. So
I do remember that blog post because in addition to being found on optionpit.com, you can also find it sporadically, but usually quite regularly, up on theoptionsinsider.com as well. So you can read all of Mr. Sebastian's glorious commentary, as well as all of our other contributors up there on theoptionsinsider.com whenever you have a chance. And Mr. T-Knob, what is coming up? What is around the block for you guys over at OX, aside from coming in early for non-farms?
We do have a webinar. We've got a few of them, and you can find them, in the account if you go to Educate and then Events. Some of the live webinars are, we have one on 8/9, 2 o'clock Eastern, VIX term structure and trading VIX options with Russell Rhodes.
He and I are teaching a class together. Did you know that?
I did not know that. So that's one of the webinars that's going on. We do have a live event going on in San Francisco Money Show on August 10th through the 12th. We'll have a couple presentations there. So yeah, that's kind of what's on our radar right now.
All right, thank you for that, Mr. Navabi, and that's going to do it for this episode of the Option Block. I want to thank all of our listeners out there for downloading and streaming and subscribing to the show and propelling us not only into those high rankings in the iTunes store, but also in the new and noteworthy section where a lot of new listeners can find our show and listen to our fun ramblings about the market twice a week. Thanks again for listening, and we will see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.